Okay, so hello guys, good day, no? So today we will going to discuss another topic for our business combination. So it is the separate and consolidated financial statements as of the date of acquisition. So part 1 kay ginhati ko siya sa duwa kay do medyo medyo malawig ang discussion, no? Medyo mababa siya. So ginbutang ko siya yanda for the theories, and on its part 2 will be the problems or the solving or the problem solvings, no. Now today at the end of the class, no, you will learn or you will know what is the consolidated financial statements and ano bala ang gina-consolidate ni FS, no. As you can remember sa aton previous nga video about acquisition of net assets, we have said nga ang business combination through net asset acquisition is that ang gina-acquire ni parent, no, ni acquirer, ni parent ni acquirer, ang bilog nga business or ang bilog nga net assets ni acquiree, no. So tungod sadto, so ginakaon, it's something nga ginakaon ni parent company ni acquirer si acquiring nga company. So this time, there is a separate and consolidated financial statements. You will learn about the another way of a business combination, no, which is equity acquisition, or pwedeng hindi bilog ang pagbakal ni acquirer sa bilog nga company ni acquiree. So it's a portion of the total equity of acquiree ang gina-acquire na rin ni acquirer. So let's start. So in acquiring another company, the acquirer must allocate its purchase price to the fair value of the underlying assets and liabilities acquired or ni acquiree, no. So because determination of fair values often involves some degree of subjectivity, acquiring firms sometimes use their discretion to allocate the values in such a way as to pave the way of future growth in earnings and reported profitability, or ang ginatawag ng mga goodwill, no, mga goodwill. So recall that business combination may be negotiated either as asset acquisition, no, atong when we say asset acquisition, hambal ko bago lang, gina-acquire mo ang bilog nga net assets ni acquiree. So nagadula si acquiree and nabilin si acquirer. Or a stock acquisition, no? Sa stock acquisition naman, it is not necessarily nga bilog nga business ang baklo ni acquirer. So may certain portion lang, certain percentage na baklo niya para magkaroon sa ginatawag nga business combination. So later mabalaan nyo kung pila ka percent before magkaroon sa ginatawag na business combination through stock acquisition. So in the asset acquisition, the acquiring company survives and the acquired company or the acquiree ceases to exist as a separate legal entities. So this topic will cover stock acquisition. So that is when one company controls, take note of this term, control the activities of another company through direct or indirect ownership of some or all of its voting stock. So natunan nyo na before, no, kung nagyan nyo sa stockholders equity, what is a voting stock? So no, when we say a voting stock, it means the ordinary share, no, the ordinary stock or the ordinary share. Di ba ang balaton sa financial accounting, duha klase ang stockholder, ang share, it is either ordinary or preferred shares. So when we say a voting stock, it is the ordinary or the ordinary stock or the ordinary share. Now, what are the levels of investment? No, these are may tatlo de, no, may tatlo nga ginhambal de. What is the levels of investment in terms of ni investor, no, to investee? So the first one is the passive investment, no, passive investment, which is generally under 20%, no, under 20%. Take note of that threshold, of that percentage. Below 20%, no, so tawag sina passive investment. So it's like nag-invest lang si one company to another company without the control or without the tawag no, significant influence, no? So ara man sa financial accounting nyo, di ba? Now, how to record? So how to record that? So at cost including broker's fee, no? And recording of income, dividends as declared, except stock dividends. So ang stock dividends naman, ang share dividends, wala na siya cash value but nagadugang si ano, nagadugang ang total number of shares na ginawiran nimo dira sa investee mo. Okay? Now, another way of investment is what we call strategic or active investment. So under the strategic or active investment, duha na siya da, either influential or may ara kita ginatawag nga may significant influence ka, no? Or kung sa financial statement, sa financial accounting yung tawag sini um, investment in associate, na kung ma-remember niyo sa financial accounting, may one topic na nga naka-focus sa ginatawag nga investment in associate, no? Sa investment in associate ara dira naka-indicate nga ang imo level of of influence over one company is that you have a 20% to 50% ownership, no? Once ka may 20% to 50% ownership ka, automatically may ara ka sang ginatawag nga significant influence, no? Pero take note, ginambal man na dira nga this 20%, 50% threshold is just a threshold. Kumbaga do mo na siya ang common na ginagamit para ma-determine if may ara ka na significant influence or may ara ka na control over a company, no? So how to record that influential or may ara ka sang investment in associate? Record mo siya kuno at cost including broker's fee. So hindi ko na siya pag-i-touch agad kay for sure naagyan niya siya sa financial accounting, no? Pero if wala, you can ask me guys, no? You can ask me if ano na siya inang less than 20%, inang may significant influence or investment in associate, or kung wala niyo pa maagyan, no? Or medyo ginlaktawan, you can ask me, no? To guide you and to share my my learnings, my thoughts about that investment in associate. Now, how to record income of that? No? Ownership share of income. No? Ownership share meaning as a significant influence over that company, hindi a dividend imo na re-receive, no? Hindi lang siya basta-basta dividends as the same with the passive investment. Diriya, kay tungod may significant influence ka, may ara ka sang ginatawag nga ownership share. So may ara ka ownership share based on your number of percentage, so percentage ng imong investment over that company, no? So ownership share of income or loss is reported, shown as investment income on financial statements. So dividends declared as distribution of income already recorded, so they reduce the investment account, no? Tawag sa na equity method ang ginagamit on accounting for investment in associate, no? Now, this another strategic or active investment, amo ni siya ang aton nga fokusan sa aton nga business combination. Kay once nga nakaabot ka di nga level, there are other may mga other considerations nga kinahanglan naton i-consider in recording and the accounting for this strategic investment. So kung kagina sa letter A, may significant influence ka. Diriya, may ara ikaw sang ginatawag nga control. You are a controlling company. So paano kung magkaroon sang control, no? So generally, if you have 50% plus 1 or over 50%, no, automatically you have a control over that company. Nga man control, no? Kay kung tanawon mo sa total nga 100%, if you have 50 plus 1, so if you have 51% of that company, you have a control over it nga man. Kung i-combine mo ang total nga shareholders, 49% lang sila. Ikaw 51% imo nga hawid nga share of that company. So you have a say, you have a control over that company. Kung ano imo hambalon, absolute na siya for the reason of control, no? For the control nga term over that company. Kagina significant influence ka lang. You have a 20% to 50%. Kumbaga nakaka-influence ka lang sang decision making, pero wala kaya sang control. Pero diriya may ara ka sang control nga ginatawag. Now, paano siya i-record? No, initial recording at cost. So any broker's fee incurred automatically outright expense. Okay. Now, how to record the income, no? So ownership share of income, the same with the investment associate, accomplished by consolidating the subsidiary income statement accounts with those of the parent in the consolidated process. No? Consolidating the subsidiary income statement account with those of the parent. So meaning, this time, naga-consolidate kita. So itong topic, consolidated financial statement. No? Now, you can account this either for a cost model, equity method, or fair value option. No, pero ang pinaka-common is the cost model. Now, classification of intercorporate investments. So an intercorporate investment is any purchase by one corporation of the securities of another corporation. No? So, ari man sa financial accounting. The investment, duha man na sila. It's either mabakal ka sang debt securities or sang ginatawag na equity securities. Sir, ano ni sang ari sa debt securities? Arada mabilong ang investment in bonds. No? Kung naagyan yun sa tawag sina bonds. Amo na sang debt securities. Mortgages, no? Amo na sa. Or equity securities, preferred or common shares. Now, the focus of this text is on equity only. Ordinary shares in the common stock. No? Ordinary shares in the common stock investments. So the investment of a corporation in the equity of another corporation can broadly be classified as either passive or strategic. So passive investment is made to earn dividends or to earn profits by actively trading the market or in the investment for a short-term profit, or a strategic or may kasang ginatawag na significant influence or a control over an acquired corporation. Now, how to account for passive investments. So passive investments poses no particular problems. They are initially recorded at cost and are reported at fair market value on each period statement of financial position or balance sheet. So there is a passive investment, muna siyang ginatawag naton nga under the PFRS 9 sa financial instruments, duha, it's either fair value through profit or loss or fair value through OCI. So the treatment of gains and losses depends on how the company has elected to classify the investment, a choice that reporting entity makes for each separate passive equity investments when the investments is first made. So sa financial naton, sa financial accounting, may aran siya sang criteria on when to classify ang imo nga financial instrument through profit or loss or to fair value through OCI. Now just to give you a quick ang knowledge pag abot diri sa fair value through profit or loss, no, it is always on the intention, no, it is always the intention of your investment and based on your business model. Sa business model nimo, kung ma-record ka under profit or loss under sa profit or loss, if ang intention nimo is to buy a stock, to buy a bond with the intention of selling it immediately, no, you have the intention of selling it within a short period of time, pwede mo siya ma-record based on its fair value through profit or loss, no. So amo na siya, kung ang intention nimo, ang business model nimo is to buy a share then sell it immediately or in a short period of time, i-record mo siya at fair value through profit or loss. Now, paano mo siya ibutang sa OCI, no? If ang purpose nimo, for example, sa bonds, no? If ang purpose nimo sa fair value through OCI is that baklon mo siya, i-hold mo lang siya dana, captain mo lang siya, you have the intention nga mag-gain sa interest or dividends for a period of short to medium medium term of time, then after sana nga time ibaligya mo siya immediately, no, ibaligya mo siya. So may muna mo purpose, baklon mo siya, i-hold mo siya for a medium term, no, mga pila ka months or pila ka years, medium term lang, then mag-gain ka lang dividends, mag-gain ka lang interest with a purpose of selling it immediately, record mo siya through OCI No, amo na siya yung mga business model. Dra mo siya i-record sa OCI. Pero kung buy and sell ka lang, buy, sell, buy pagbakal mo, baligya ko man sigida, or ara kasi ginatawag nga trading or active investments, record mo siya at fair value through profit or loss. Now, so if an equity investment is classified as fair value through profit or loss, both dividends and changes in fair value from one period to another period are reported in income section of the statement of comprehensive income. If on the other hand, an equity investment is classified as fair value through profit through other comprehensive income, ang dividends mo siya sa net income, meaning sa statement of comprehensive income, and any change in fair value, ibutang mo siya sa other comprehensive income, no? I-record mo siya sa other comprehensive income. So the accumulated gains and losses are reported as a separate component of stockholders' equity. So the choice to classify an equity as OCI is irrevocable. The change cannot be changed subsequently, no? Kung nag-OCI ka na, hindi mo na siya pwede maislan sa other measurement. Dara ka na mastik. Now, sa strategic investments naman, iba na siya diya. Sa strategic investments, no, provide a long-term advantage, advantage by giving the investor the ability to either significantly influence atong 20 to 50% or to control. You have more than 50% of the total voting stock, no? The operating or the financial decision of an investee. So strategic equity investments can take several different forms depending on the investor's strategic objective. One, no? Ano-ano ang mga controlled entities? Number one, investment in subsidiaries. If ang investment mo gin-classify mo as subsidiary, so under na siya sa ginatawag nga PAS 27 or the PFRS 10. Kung kaginaya sa fair value through profit or loss or through OCI, under to sila sa PFRS 9, which is investments. No? Ginatawag naton nga instrument, mga investment instrument. So structured entities or variable interest entities, mga associate companies, investment in associate, no? And joint venture. So joint venture have a separate topic, has a separate chapter, no? And hindi na siya di mabilong ano. Kaya ang joint venture, it is also a special transaction, whereas they are only related pag abot sa joint venture. So beyond the joint venture, hindi sila related na muna siya ang joint venture. So under na siya sa PFRS 11, which is the joint venture. No? So generally, investments are considered strategic if a company owns either directly or indirectly 20% or more of the voting shares, meaning ordinary stock. Please take note of that, ha? Unless it can be clearly being demonstrated that the investments are passive. So meaning passive, less than 20%. Ngaman ginaano ko, no? Ngaman emphasize ko ang voting stock or ordinary stock. It's because kapag preferred shares ya, maski ikaw lang ang 100% nga owner sa bilog niya nga preferred stock, you have no control over it. No, wala kaya control over it unless you have a 20% to 50% or more than 50% sang ordinary stock. So next, what is a controlled entities? So there are many aspects of control that accountants must be aware of. The two general types of control are subsidiaries and structured entities or variable interest entity or the VIE or ng mga associate na siya. By far, the most common type of control entity is a subsidiary. So a subsidiary ko, no, is a corporation or an unincorporated entity such as a partnership or trust company that is controlled by a parent company. So meaning, si parent, amo na siya controlled by a parent, no? Meaning si parent is the investor, si subsidiary si investee, or si parent company si acquirer, si subsidiary si acquiree, no? That owns usually a majority of the voting shares or rights of the subsidiary. Since stockholders elect a corporation board of directors. Holding most of the shares enable the parent company to control the composition of the subsidiaries board of directors. Now, what is the concept of control? So consolidation is the process of combining the assets, liabilities, earnings, and cash flows of a parent and its subsidiaries. So please take note na sa muning relationship, the parent is only one company. Take note of that. While the subsidiaries can be composed of many corporations. Or for example, si parent A, may ara siya sang subsidiaries nga si B, si C, D, E, F, G, H, I. Si subsidiaries sila. Si parent, isa lang, si A. No? And kapag may ara sina nga nga relationship, si parent, ang financial statement ni parent should be a consolidated one. Meaning, parent plus all of its subsidiaries will prepare a financial statement, a combined, a consolidated financial statement. But si subsidiary, before mag-consolidate, must prepare its separate financial statement. Take note of that, guys. Si subsidiary will prepare its own separate financial statements. Then, ina nga mga individual financial statements will then be combined, will then be consolidated to the parent nga company, no? As if they were one economic entity. Since an economic and not legal perspective is adopted, so transactions between the companies within its economic entity and the resultant balances must be eliminated. So kung may mga intercompany sales, which is may another chapter for that. For example, may intercompany sales, meaning si parent nagbaligya kay subsidiary or vice versa, si subsidiary nagbaligya kay parent, whatever income nga na-receive nila on that transaction will be eliminated kay considered ganun sila as one corporation. So nagbakal ka kung nagbaligya ko on yourself. So awkward, di ba? So a parent is an entity that controls one or more subsidiaries. A group is a parent and all its subsidiaries. Take note of that. Ang group ko no is a parent and all its subsidiaries. Now, PFRS 10, guidance on control. No? So an investor considers all relevant facts and circumstances when assessing control over an investee. So PFRS 10 uses control as the single basis for consolidation. Ngaman, once nga may control ka over that company, automatically you have to consolidate kay may ara sang parent and subsidiary relationship. So an investor controls an investee if and only the investor has all of the following three elements of control. No, dapat all, ining tatlo, dapat present before mo siya ma-considered as control. 1. Power over the investee. So the power is the ability to direct those activities which significantly affect the investee's returns, meaning you have the control, you have the power, you have the ability to influence, to direct, no? Hambalon mo sila, ay hindi na pwede, so hindi nila pagsundon, ay pwede na sundon nila, no? Kung may control ka over their operations, you have a part na nga may tawag nga control ikaw. So it arises from rights which may be straightforward, mga voting rights, or complex through one or more contractual arrangements. So another elements is exposure or rights to variable returns. So from involvement with the investee's returns must have the potential to vary as a result of the investee's performance and can be positive, negative, or both. Meaning if si investor, no, if si investor may ara sang gains or loss nga mabaton based on the performance ni investee, meaning based sa iya nga income statement. Kung profit si investee, edi profit man si si parent, pero kung losses si investee, edi losses man si parent. And the ability to use power over the investee to affect the amount of the investor's returns. Right? Lang ha. Right? So let's proceed. So power arises from rights. Ano yung power arises from rights, no? Such rights can be as straightforward or atong ginatawag nga voting rights. no, if you have a control, of course, you have the 51% minimum, no, para magka-control ka. You have a 51% right to vote, no. Pwede mo na piliin mo ko galingon para maging president. So an investor that holds only protective rights cannot have power over an investee and cannot control an investee. So power can be obtained directly from ownership of the majority of the voting rights or the ordinary shares, or can be derived from the other rights such as right to appoint, reassign, or remove key management personnel, right to appoint or remove another entity that directs the relevant activities, right to direct the investee to enter into or veto changes to or other rights, no? So if i-generalize mo siya, no, yun ang ginatawag nila nga control, no? If you have the kumbaga if you have the absolute power, if you have the overall control of that certain investee, no, you have the control, kumbaga may say kagit sa tanan, may control, no? Pag ginambal mo, ay hindi ko sinaiya, automatically ma-follow sila. Ay gusto ko na, no, tagain niyo ko na, no, hindi ka mo sila magbakal, no, ang mga muna ba lang ang mga mando. If you have that power, no, automatically you have a control, no? Kasi kung basahan mo siya, no, it's like do kayang-kaya mo lahat brahon on that certain investee or certain nga subsidiary. So continuation, when assessing whether control exists, an investor with decision-making rights should establish whether it is acting as principal or agent of other parties. So doon mo na siya, no, in general, no, you have all the power over that investee. Kayang-kaya mo siya kontrolon kung ano man iya nga direction as a company. Now, control as the criterion for consolidation. So a subsidiary is defined as an entity that is controlled by another entity, the parent. So control is the criterion for identifying a parent-subsidiary relationships and the basis for consolidation. So the determination of whether one entity controls another is then crucial to the determination of which entities should prepare consolidated financial statements. Now, what is the default presumption? Okay, take note of the term, default presumption. The presence of control determines the existence of a parent-subsidiary relationship. So in the context of PFRS 10, the quantitative criterion of more than 50% of voting power was not mentioned but not superseded by a new rule. No? Amo dong hamba ko kagina nga, it doesn't mean nga kung may ara ka 50% power, automatically may control, no? It is just a threshold nga kay tungod more than 51% ka gani, hindi may control ka, no? Pero kung ma-research ka mo, no, about mga companies like mga Facebook, no, do pagkabalo ko na like si Mark Zuckerberg ba, no, sang taga sang Facebook, no, dugamay lang na iya nga shares dira, but he has a control over the overall company, no? Kay maski gamay siya kay ang threshold nila for control is mina lang ya ka percent, then it is considered, no, i-follow mo na iya as a control nga percentage. So for practical reason, the presumption is that ownership of more than 50% of voting power constitutes control, no? Kung na niya presumption nga kung may sobra ka tunga sa ownership, hindi may control ka, no? So in the absence of any evidences to the contrary. However, control also arises from many other sources: stature, contractual arrangements, implicit or explicit control over the board of directors, among others. So as PFRS 10 is based on principles rather than rules, the use of quantitative criterion is only a guide, no? Guide lang na iya. Di na siya isang absolute nga minagid ang sundon. So this is known as the default presumption. It doesn't mean nga kung less than 20% imo nga investment is wala ka na significant influence. So depende Japon niya sa company, sa actual nga company, if pila ka percent para magkaroon ka sa ginatawag na significant influence or control, no? Now, separate financial statements. So PAS 27 defines separate financial statements as those presented by a parent, an investor in an associate, or a joint venture in a joint venture, Canada venturer in a joint venture in which the investments are accounted for on the basis of a direct equity interest rather than on the basis of reported results of net assets of the investees. So when the parent acquires a controlling interest in a subsidiary, the parent makes an entry debiting investment in subsidiary and crediting either cash, debt, or stock depende sa kung anong ginbayad niya. Depending on the medium of exchange, assume that the acquisition relies on a cash purchase of 500,000. The entry in the parent's books would be debit, investment in subsidiary, credit, cash, ng 500,000. Pag abot naman niya sa 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 subsidiary nga book, edi maka-receive sa sang cash and credit siya dayon, which is additional na sa ilang shareholders equity, no? Pero as an parent, as an acquirer, imo i-record is investment in subsidiary. Now, the acquirer shall recognize goodwill as of the acquisition date. So may goodwill na naman. How? No? If the aggregate of consideration transferred in accordance with PFRS 3, which is then requires acquisition date fair value, plus the amount of any non-controlling interest in a business combination achieved in stages, the acquisition date fair value of the acquired is previously held over the net of the acquisition date amounts of the identifiable assets acquired in the liabilities assumed measured in accordance with PFRS 3. So later, sa solvings, we will determine what is a goodwill and how to compute for a goodwill. So where 2 exceeds 1, PFRS 3 regards the giving rise to a gain on a bargain purchase or bargain purchase gain. Now, consolidation of wholly owned subsidiaries. When we say of wholly owned subsidiaries, pag bakal mo, 100% ang bakal mo. No? So there is no question of control in a wholly owned subsidiary. Many factors have an effect on the fair value of a company and its market per share of stock, including its asset values, its earning power, and general market conditions. So when one company acquires another, the acquiree's fair value is based on the consideration given, maybe equal, more than, or less than the book value. So darato yun ka-arise ang goodwill or bargain purchase option. So in case there will be a difference between the fair value of the subsidiary and the book value of the acquiree's net identifiable assets, tawag sina allocated excess. Now, consolidation of a partially owned subsidiaries, meaning some partially owned, ginbakal mo siya at less than 100%. I mean, nagbakal ka, nagkaroon ka sang control, pero hindi 100% imo ginbakal nga stock, no? So what will happen with that? So when a subsidiary is less than 100% owned or partially owned, may mga problem ko na nag-arise. Naman, kinanglan mo mag-recognize sang number 1, always ni siya ginagawa ko sa board exam na, how much is the goodwill and how much is the non-controlling interest. No? So kung nagbakal ka sang 80% of the voting stock, 80% imo, may non-controlling interest nga 20%, in which you will account also for that. Now, you will record, you will account, you will measure that in ang 20% nga non-controlling interest. And that non-controlling interest, may araman na siya goodwill nga naka-attach. Now, PFRS 3 allows goodwill and non-controlling interest in the acquiree at the acquisition date to be measured at either full goodwill approach or partially goodwill approach. No? Fair value or proportional basis. So later, you will know that. Now, if we will use the full goodwill approach or the fair value basis, so when the non-controlling interest are measured at fair value, so goodwill attributable to non-controlling interest will be recognized in the consolidated financial statements. Under the fair value basis, non-controlling interest comprise 3 components: share of book value of identifiable net assets of subsidiary, share of identifiable net assets of subsidiary, and share of goodwill. Please take note ka ang non-controlling interest nga account is recorded on the parent's books. No, sa parent na siya nga libro gina-record. Now, under the fair value basis, non-controlling interests are determined with reference to either active market price of equity of the subsidiary at the acquisition date or other valuation techniques. Make sure lang always natin siya gina-measure at fair value, no? Now, Under the partial goodwill approach, no, under the second option, where non-controlling interests are measured as a proportion of the acquirer's identifiable net assets. Non-controlling interest comprise of two components, share of book value, no, and the share of identifiable net assets of subsidiary at acquisition date. Non-controlling interests, share of goodwill, is not recognized under the second option. Take note of that, proportional basis. Again sa full goodwill approach, ga-record kita goodwill nga share ni non-controlling interest. While sa partial goodwill, no, the share of goodwill is not recognized under the proportional basis. And that would be all. So our next video for this will focus on the problem solving. So if you have questions, please don't hesitate no mag-message through our GC, or kung nahuya, you can contact your captain, then ask anything, no, so that I can answer kung ano man ang nabudlayan or hindi nyo maintindihan. So thank you for listening and God bless us all.